What's going on, guys? How's everybody doing? Get started in a minute. Just give me a sound check. Hopefully the microphone starting off working properly. Last stream was a little bit of a mistake on my part, I think, resetting the settings. So good morning, good afternoon, good evening, wherever you're coming from. Hopefully this stream will leave you better off than how you arrived. Sound is good. Good. All right, let me just turn on the background music a little bit. Background music, the right level. I don't know why I don't do this, where I just remember exactly how many decibels the desktop audio is, so that I don't have to ask these questions over and over again. Good morning, good morning. All right. So, welcome. Hopefully you guys are doing well, doing as best as you can. It's been a very interesting last couple months, right? More than a couple months at this point, well beyond a couple months. Most people use the term couple pretty freely, right? They use it and it's used to just indicate some kind of larger quantity, but just a couple means two. So let's use it right. But it's been a bad year. So, and then it looks like we've kind of just begun to speed up. Some interesting things taking place in legacy markets. Some things that I would say do satisfy the, what I've said before, things are going to break. So we're starting to see signs of that. Just look at the behavior of bonds, treasuries the last couple days. I think like the 2-year, the 10-year, and the 30 are like all in line right now. Yesterday, the 2-year was 2 in the 10. The yield curve was inverted again. So we've had, it's been a really tumultuous period. But if there's one thing I could start off saying is that this too will end. All right, so I don't want to get too hokey in the beginning. But anyway, all right, cool. So let's start it up. So if you're not a subscriber, make sure you hit the subscribe button to the BlockRoots channel. Also, hit the like button. Right, hit the like button, show us some love. Been doing this consistently now, every Tuesday, every Thursday. Thanks to our partners at Phemex. So if you're looking for a good exchange, or a great exchange, I should say, because after yesterday there were no issues. If you're looking for a great exchange, great customer service, no KYC unless you want to, and get the added benefits of KYC, which are reduced fees. 200 pairs, spot perps. Use the link Phemex.trade. And also shout out to my friend and partner, Josh Rager. One other thing though, before we get into it, I'm going to be doing I have new plans for the next couple months, for the next couple years, maybe. We'll see. Right? Just being facetious. But go ahead and follow me on my other YouTube channel. This is, let me just move this in so you could see it. It's Horses for Courses. I will post the link in the chat. So I'm going to be bringing some new content to the space. Horses for Courses is going to be a mix of what you see here. So commentary, trading, and then some other stuff that I want to throw in. So I'm going to diversify my content. And I don't mean, I'm not trying to sell you any kind of products or anything. I'm going to diversify my content. I'm going to be posting more. I'm going to be sharing my life more. And hopefully helping you guys improve yours in whatever way, shape, or form that I can. So make sure that you go ahead and subscribe to Horses for Courses. Before we get started, remember none of this is financial advice, right? Strictly for entertainment purposes only. I said yesterday that I normally would cancel. I mean, I would want to cancel a stream like today's. After yesterday, it's just odds are that the next few days are going to be really good trading days. And I want to be as present in the market as I can. I traded all night last night, and that turned out to work out really well. Just scalping, just very low time frame trading. Honestly, looking at just the minute and the 30-second chart and the tape. Footprint, minute, 30-second chart, and the tape. And basically just getting a feel for the rhythm of the rotations. But what I'm going to be doing during this stream is having a couple charts up. So you'll see right now the depth of market, the DOM, is on the right-hand side. So I can go ahead and execute trades right through here. So I have this speed set up. So I could just tab in 1 BTC each click. And then so that you could follow along up top, you'll see that where I enter and exit, if we do get the opportunity, there'll be markers left over. So right now, let's just say that I want to buy like 0.01 BTC. We'll go ahead and buy that. And you should see, there should be a marker. Where is the marker? 1 second. Settings, visual trading, trades, color. Weird that it is not popping up. Let me try that maybe with a higher quantity. Let's buy 1 BTC. Buy the ask. Still no marker coming up. Oh, there we go. Okay. Sorry about that. I was looking at the wrong chart. So the top right, you see how there's that blue arrow? Yes, the Bloomberg page is meant to be on the screen right now because I'm just going to go through some stuff and then we'll look at the other charts, right? This chart. But the top right-hand corner of your screen, you'll see that there is a little arrow. And now if I exit the trade and flatten it, there'll be another arrow. Right, so just in the case that while we're trading, yeah, I know. I know that half the screen is blocked. Right? It's meant so that it can fit this, which is the margin, the prices, the watch list, and that's it. So again, it's a down-only market right now. It seems it's a down-only market right now. We're at a very significant level that we've been talking about now for months, right? Quarters. This is the 200 period weekly moving average. I don't know why this blue bar is right there because we did not bounce to 28. Seems like there's some kind of data error, but we're back at the 200 weekly moving average. This is an area that in the past historically has served well to buy. This is sort of your value area, back to value, reversion to the mean level. I mentioned that I was going to be buying this because I had talked about it for so long that if we came back to it, it'd be absolutely an area where I would add some spot. This doesn't mean that I have to hold on to the spot. I could easily change my mind, get out of position, right? So I'm not locked into anything, but I am buying this level. And a couple people say that, you know, we've approached this level and, you know, there's a change in variables and, you know, I guess implying that there should be more discretion on whether or not you buy this level or, you know. Listen, the 200 weekly moving average is always going to be standard deviations away from price. So if we come back to this level, the chances are that we have a plethora of variables that are negative that took us back here. So you can always justify a reason not to buy it when you get there. I mean, you could always overthink a ton of trades. When more than likely, if you have setups that, you know, have a degree of probability working in your favor, you should just swing. It's easy to really overthink setups that you could swing at. If you're wrong, exit the position, right? Not talking about holding something underwater. But it makes sense to take a lot of trades without thinking too much if you have certain criteria met. And this one is more of a long shot, but it's still, right? It's a significant line in the sand. So I've been talking about buying this level now for forever. You know, it's always a matter of if we come back to the 200 day, this is an area that I would add long-term spot BTC, right? This is 3-5 year positions. If we nuke through the level, I could cut it. But the point is, I'm not going to be one of those people that when we get back to the level that, oh, this time, it came back too violently, it doesn't look good anymore. It does, honestly. Right? At least in the short term, we're sitting on top of the 200. If we have a bullish close above it, you could more than likely see some kind of response by the market. And especially if equities find somewhat of a floor going into FOMC, and if we have a positive response out of FOMC tomorrow. So again, I'm just taking the trade. It's a mechanical trade. It's a spot trade. If things go wrong, well, then I lose some money. But I don't want to have not taken it and then see, over the coming weeks and months that it turned out to be a good level to buy, and I just kind of psyched myself out. Everyone on your timeline right now is spewing negative information out. Right? No one is saying anything new by reinforcing the bearish narrative. No one's saying anything unique. No one is saying anything new. People are just captivated by the moment. The moment is a negative one. And because of that, narratives are following prices. Right? The lower we go, the more of a scam this all was. Right? Suddenly there is no long-term reason to own it. And it's really only the diehard maxis that are continuously beating that drum. But this is how this space works. It's overly emotional. This market is extremely reflexive. And this is to be expected. It's the inverse opposite, the inverse and opposite of the behavior that you see at highs. It's the yin and yang. At the highs, everyone is extremely euphoric. It's never going to end. This is a new paradigm. This time is different. Everyone is in great spirits. And as prices move lower, the exact opposite thing happens. So you shouldn't really be scared by it. You should expect it. So what you don't want to do is continuously read it and be surprised by it. Hopefully this all makes sense. Right? So the discussion and the consensus happens to be that it looks like tomorrow, 75 basis points is on the table. There's a pretty strong case for that at this point. So there's a couple ways to think about that, and then I just want to get into looking at the chart. And there's not much because we're much lower than any very significant level, but still talk about my thoughts, how I'm approaching things, and take questions. One of the things that I've been thinking is that because the market is, and this is, I'll answer questions in a second, Jed. So the market is pricing in 75 basis point hike. So it's pricing that in right now as we speak. So if we look at, the ES, 37.52, right? If we look at the 2s and the 10s, I mean, these are just ripping right now. The 10-year and the 2-year are basically in line. So the yield curve is almost inverted. It was inverted again yesterday. Dollar's up, oil's up, everything that's risk related and anything in the equity market, unless it's like energy, has been down. And McDonald's was up today too. But the market's pricing in 75 basis points. There's a couple of people that say, one, I think that Powell has mentioned that earlier. He mentioned that was off the table, where that would be just, something that they wouldn't consider above 50 basis points. So if if we get 50 instead of 75, there's a lot of people that are saying, oh, the market, has been pricing in 75. We're going to see a bounce because of 50. I think that I've mentioned this multiple times. The Fed is not really a fan of markets just bouncing at anything that seems semi-positive. Right? This excess and animal spirits in markets are one of the things that they want to squash, at least in the near term. So what I think, honestly, is if we did get 75 basis points, and that's confirmed, and 100 would be out of the question, I think, right? But it doesn't seem like a lot of things are really out of the question in markets lately, is that it would be a sign that the Fed is really taking things seriously because they are pivoting on what they've set up to this point, right? Where they wouldn't do that. And I've always mentioned this throughout this year, where if they just do things in a predictable, sort of tame manner, you might see more of a negative response than if they really throw the book at the market. because then it would show that they're really serious about tackling inflation and dealing with the inflation issue, even though we know that hikes are not necessarily going to be completely responsible for abating inflation and bringing that down. But still, I think it would be a positive signal to markets. But we'll see. I mean, we don't have to think too much because it's tomorrow. So this is one of the things. Like, there's a lot of conversation. I'm taking part in it right now, but we're so close that you're going to know the answer very soon. So if you could, save some of your bandwidth for better things in your life, spending time with friends, family, hobbies, instead of worrying exactly what's going to happen, because you're going to see what happens. And when you see what happens, there's ways of interpreting it, right? If we have negative news beyond expectations and the market doesn't budge, that's pretty bullish, right? If we have negative news and the market begins to sell off, that's bearish. My point is, it's going to be reflected in price action. This market is very slippery, very thin lately. It doesn't make sense to fade. It doesn't make sense to fade momentum and play for mean reversion until you actually see mean reversion. Until you actually see that begin to shift, just the signs are not enough. You need to I need to see a trend in progress when it comes to taking any kind of positional trades, swing trades. I'm not talking about just adding a little bit of spot to my portfolio. I'm talking about, getting bullish, right? So it needs to be 100 to curb demand. Yeah, that would, throwing 100 tomorrow would, I mean, the shock and awe in the market lately is already leveled up, but that would be borderline catastrophic. They could do this slowly. And I don't want to turn this into something that's more macro related, but we're not really doing much right now. But we'll get to charts in a second. They could do this slowly and get away with it. If the market drops to like 3,000, 3,200 in the near term, they're going to have to rethink this and start potentially increasing their balance sheet again. And I think we're looking at that in the next year either way. So to wrap all this up, not get too far into it again, this is this could be a year and a half of your life. I know it sounds like a long period of time, but that's plenty of time to learn how to correct the mistakes you made in the past so you don't bring them forward into the future, and that you can take advantage of the next bullish market cycle, right? The next bullish period. It doesn't have to be period. That was redundant. It doesn't have to be something that's sustained for 2-3 years. We're talking about trends that can happen over the course of months, right? The S&P can continue to move up towards the highs and still be stuck in a range for a couple of years, but can have ups and downs that are, multi-month, multi-quarter trends, right? So anyway, the talk right now is, completely around Celsius. I mean, the talk right now is around anything that's negative in crypto. Layoffs. We have layoffs in traditional markets, layoffs in crypto. You see, though, who's strong, right? Who is strong? Exchanges that are not laying off. They did the work, right? They have ensured that they are in a place to survive. So we see things like CZ, Binance, FTX both talking about hiring rather than firing. I mean, the signs were kind of there for Coinbase. It's just a shitty exchange. But Celsius is the flavor of the last couple of days. Celsius, which many people had talked about, kind of their time would come. One of these moments would come. Just a matter of when. I never invest in anything like this. I get my yield through trading. I don't trust any smart contracts. I didn't trust things like, Terra or Luna. There's a lot of smart people that they should have swayed me, honestly, but I'm just very skeptical at the end of the day. Unless it's up or down or something related to delta neutral that I can figure out and explain very simply, I don't really want any part of it. I don't want to lean too much on the technology working or the idea working. I'd rather just trade to generate yield. But Celsius has been... There's a talk about, Celsius having a bounty on its back. And the one thing about this market and it is one of the things that is worth bragging about, but also one of the things that clearly can hurt, is the level of transparency. So we can see funds positions, larger players positions, how they're moving their money around. Of course, they're trying to at a larger level, they try to obfuscate it. But the market is extremely transparent. So we've seen over the last 24 hours, we've seen Celsius top up their margin requirements and continuously move their liquidation level down. Now, this could be for a lot of reasons. Maybe they're baiting the market into shorts, right? Maybe they are creating the perfect powder keg to slingshot the market back in the opposite direction. Maybe it's just truly due to weakness, right? Maybe there are plenty of things that we could get into and narratives we could spin. Either way, it's been a net negative for the market, right? Again, this market tends to seek out. It seems like the behavior in this market is one that when there are large players that are showing weakness, it's kind of like the jungle, right? They are bleeding in the middle of, not even the jungle, they're bleeding in the middle of the plains of Africa, and they are the gazelle that has been, that's been wounded. And the entire market is privy to that, and the amount of transparency doesn't help that. But to start taking off and saying that FTX is trying to liquidate them, and it's just, there's a lot. Just to wrap this up, and then let's take a look at the chart. There's so much bullshit that gets spewed around during times like this. So much bullshit by mainstream media, by people that have been very big players in this space that were bullish 4 months ago and now are extremely bearish. It's just, people are extremely emotional. I think that honestly everyone could spend a couple weeks off and come back and they'd realize that the world didn't end, right? Anyway, I don't want to continuously beat this drum. So let's take a look at the chart. So ES sitting at a critical level. So there is the ES zone 200 weekly. Let's get this off the chart. But broke below that 38. That 38.50 level was last year's point of control. Next major level for the ES, 36, and then 34. And if we continue to move down, if stocks continue to move down, BTC is going to continue to move down. Right? There's no ifs, ands, or buts about that. I did see the Cumberland thread. I'm in a chat with a couple people that used to work for Cumberland and are larger players in the space, and they think that Cumberland is just basically farming engagement at this point. Talking about Tether, it's like everything happens in this market over and over again. It's like the time is a flat circle meme. It's like we always get back to the point where it's banning crypto, some kind of mining FUD, some kind of Tether FUD. But I looked at it, but I can't really take it seriously. So the ES, if we find stability, we haven't had a turnaround Tuesday yet. So that's a trade that is a play on behaviors. Right? We talked about this in the past. Selling into Friday session, selling over the weekend when futures open, selling Monday, and then the Monday selling is like catch-up selling, just last-minute panic selling when the market opens. Ton of positioning that is off sides, and Tuesday often offers a bounce. So if you buy the close on Monday, it's usually a good trade that you could close out Tuesday afternoon for some upside. So we have nothing that really indicates any kind of major turnaround Tuesday in the making. But we're going into FOMC. So FOMC, CPIs, what we've seen more recently compared to previously into these events is that things kind of flatten out. People unwind positions. You don't want to go into this holding anything with any kind of directional certainty. So I think that, if there's a turnaround Tuesday that would be lackluster, it would be the day before the FOMC. Right, but FOMC, if that brings downside volatility, there's no reason to think that BTC won't continue to nuke down. So again, I could easily get rid of the positions I added because I think they are in such an oh shit area. There's no reason to assume that the previous all-time highs should act as support. So just to get that out of the way, this level is not meaningful at all. I've said many times before, it was established on vapor, on fumes. There was no trading volume really there. It's purely a psychological level. It doesn't make sense to assume it would be support. So the last bastion of support that we have right now is the 200 weekly. If we lose that, you're looking at filling out this gap. So whether that means 16, whether that means 14, or back to the top side of the structure, there's there's not a whole lot that can slow price down there. So put it that way. And there's not a whole lot, that could slow price down on an individual level for BTC, because we see that right now it is very correlated to macro, and as reflexive as it was to the upside, it's equally as reflexive to the downside, if not more. Right? So for a while, people were talking about, we have, and I'm not patting myself on the back, but how many red candles do we have in a row? And rather than looking for a meaner version on this, it was a better idea to just assume that this indicated a really strong trend. That happened on the way up, right? So really, if you want to get doom and gloomy, maybe these two are the same, right? Break out of a multi-month range, really strong leg. Break out of a multi-month range, we're going to get a really strong leg. So who knows, right? So as far as just local levels, let me switch something up so you can see the TPO up top right. We don't really have what looks like a very strong sign of a bottom, right? If I was looking at this, is it possible that we do bottom out around the 200? Absolutely. Is it likely that this already has bottomed and it wouldn't take a couple more jabs at the low? I don't think so, right? If we look at the TPO up top, as far as if you're going to say that this would be, right, this by all means should be called the generational low, right? There's no lows above us that should have been called the generational low. They're still back within market structure. So a generational low should be, once in a lifetime opportunity, things that very infrequently happen. So the lower down we go, the more likely that begins to set up. So if you're saying that this is the once in a lifetime opportunity, then you should see once in a lifetime type of buying behavior. It should be rushing through the gates to buy Bitcoin. And what that should leave you with is a structure that does not look like this, right? So this is a poor low right here. This is a good low right here, but this is not the kind of low that you want to see after a multi-week trend, right? To say that this is the low. Again, what you need to have to actually say that it's done for a while is something more along the lines of, let's see if I have enough memory loaded in this to go back. I don't think I do. You want to see something more along the lines of a massive buying tail, right? Excess. So you'd be left with what actually looked like it was developing yesterday before it continued to print. So it turned into today, but what you want to see is some kind of tail, some kind of structure that looks like this, right? Long tail, and here's most of your distribution up here, right? So at least you have the first sign of rejection, and then more often than not, right, when you have that, let's say that's your tail, this is your beginning of your fat bottom, more often than not, you're still going to retest that level. So after this low has been put in, after you have the initial bounce, it pays to honestly wait for a second attempt at an entry, if you're looking to place a trade, right? So, it should be really obvious right now, guys, that you should be patient. You shouldn't be running to this market to lose money, because that's what is more than likely going to happen. Let me just move something over. So balance so far. So we have semi-balanced day right now, attempting to accept back within where the bulk of yesterday's distribution was painted, right? But we do have yesterday's point of control around 33,668. Honestly, if we begin to push up from here, so if we begin to push up from here and we're able to find stability above something like 23, then I could see taking a short-term trade back up to yesterday's point of control, right? Looking to snipe those highs, basically. So maybe we'll get that during this. Right now, we're still kind of ranging within value. Price has, and this is the kind of environment where I'm not really, honestly, you're seeing traps set up. So you're seeing little pockets of open interest build up and brief unwinds of those periods. But I'm more focused on the overall rhythm of the market. So I am looking at a low time frame chart. Yesterday I was trading a 30-second chart. And when I talk about rhythm, or when I say cadence, you could basically eyeball what I'm talking about right now. Right? Sort of the average rotation size, average pullback size of moves over a span of time. And you could use something, use certain tools to help you, or things that might help you eyeball it better, whether you're, creating a channel, whether you're, drawing diagonal trend lines, whether you're just looking at the overall rotation sizes. But I think a lot of the trading on the low time frame, especially yesterday for me, was just based on paying attention to the rhythm of the market. Right? Looking at how the downtrend had behaved on the way down, getting an idea for the average rotation size upward. So, the average expected bounce we were getting on the way down before things began to continuously unravel, and beginning to scale in both short and long at where those extremes were. And in this kind of environment, cutting trades immediately if they're coming back to entry, because you're going to see that clearly in a very thin environment, it's easy to get wrong or to be wrong and get off sides very quickly. So right now, balancing out, you see this little rotation we have from high to low taking place, more struggle over here than we had over here. So we're getting a little bit thicker over here. Liquidity probably coming back a little bit more, right? This is closer to the splash. It makes sense. So honestly, if we're able to continuously march and get back above and find a support above something like 23, then again, I would look for some kind of squeeze that I think would take us at least up to yesterday's point of control. If we look at this on the high time frame, again, you could look at something like the hourly. And you see how the hourly is basically just candle close and then candle open here, no wick whatsoever. So no struggle down there, no back and forth. A lot of times, when it's on a 4-hour or a daily chart, it has more merit to it. But very infrequently do you see that this is the low that's left. So my point is, I don't know when, I don't know how, I don't know if it means this first, but this 9 times out of 10, 99 times out of 100, more than likely, gets revisited, right? So the name of the game right now, guys, is not honestly, if you're willing to trade both sides and you're willing to cut positions and again, just kind of dance with what the market is giving you, you can play both sides quite well. But I think the name of the game is honestly looking for the rally that we're ultimately going to get to fade again. Because if this is, even if this, and this is coming from someone who, again, added spot here, even if this is the generational bottom developing, as I said up here, right, which we ended up getting, as I said up here, you're going to visit the lows multiple times. This one visited the lows and broke down. So I ended up shorting the breakdown. This one visited the lows and break down. So now we have another area to begin to look for maybe that behavior develop. And it's going to be wide, right? So if we get a spike up, it's going to be a spike to sell. In this environment, it's not, unless, let's say we get an extremely bullish response tomorrow. There's some plays that could really extend. If we're testing the underside of this structure after time, right? So let's say that we march our way up here and we're hanging out at the underside of the structure, then you're probably going to squeeze up to the high. So unless it's it was the same concept as back here, unless it's a vertical move into this level, a vertical move into this level is probably a better trade to just sort of reflexively fade. But even then, you got to be careful because you're going to get a lot of people that are thinking the same thing. So when it comes to this, a vertical move to this level, I think would be a great short, but I'd rather see that either we begin to die here right away, or if you do get that explosive squeeze through, that we're back below here. And guys, I'm not trying to entertain this too strongly because look at the price we're at right now. That would be a 25% plus move. Yeah, I'll turn the background music down. So just keep in mind, lower prices, and you have to keep this in mind if you're shorting in bad positions. You always have to consider, you always have to think this way anyway, right? Just to have, just in exercising risk management. It's not going to take much to move price far down here. You're getting 5-6% 1 minute candles in some cases. So just be careful. So other trades that maybe we'll be able to spot during the stream. And then I'm just going to open it up to questions because I wanted to stream, but I also wanted to keep an eye on the chart and take advantage of some of these moves. So this will probably be more of a Q&A while we kind of stalk things. So another opportunity would be some kind of rotation back down, either cleaning up this low, so a play at around 20,008, or if we could develop some kind of sign of absorption again towards that. There's like a little bit of a shelf here around 21.6, 21.8, and that is basically today's value area low so far. So maybe we come down here, show signs of continued absorption, right? Sellers get caught off sides. Maybe you have a little bit of a, in terms of price actions, I'm going to clean swing failure take place in the low time frames, continue to hold those lows. Then I would just play this structure, right? Any kind of move that begins to accept below here, I think you could just bet on revisiting the lows to clean those up. And then maybe you get something again that develops at the low. But I wouldn't hold any positions here. Like for example, if let's say we're looking at the next trade that maybe sets up coming down to that 21.8, 21.6 level. Let's say that it, you end up longing early. You don't wait for development. I think you want to wait for development. Let's say you long early and then price is doing something like this. There's not really, this is not a market where you're going to have backup. So a low right there, prices failing to hold these lows locally. Just expect that this market move is going to continue to move quickly. So you really have to have strict criteria right now for how you get into trades. What I mean, I guess, is just have high standards. And you can see we're kind of rolling over a little bit towards this high compared to, again, earlier we had much more impulsive price action. But again, equities aren't helping. Dollar continuing to press up. If I had $1 for every time I saw just a TA trader say that this was going to be a swing failure and that this wasn't a basket of currencies and was like some kind of shitcoin, I would have a lot of dollars, right? This all clear, guys? This is not trading advice, Jed. This is how I'm trading. Don't mess that up. This is not financial advice. And just as a reminder, everyone was talking about the Binance buyer. And I mentioned 2 streams ago, the Binance buyer, if they're buying that amount of size, they're probably not price sensitive. They're probably willing to buy lower. So for anyone who is looking at prices $6,000 higher, looking at what you still see right here, right? For anyone who's looking at that thinking it meant something in the short term, you're mistaken. If someone is trading in the 9 to 10 figure range, a yard worth of capital, they're not worried about prices moving a couple percent. They're probably scaling in over a much larger area, if that's what they're doing at all. This could just be a wide, what you're looking at right now is like a wide spread, some kind of outer, like some kind of person bracketing prices looking for any kind of outsized moves. But earlier, right, Binance spot, we saw, earlier in the week, very large positioning getting involved. And look where we are. We continue to we continue to move down. So it didn't mean shit. Something that is worth noting, at these lows right now, there is a bit more selling of perps than there actually is spot. So leading into this move, it was very spot driven, specifically on FTX, very spot driven. So right now we're in a position where at these lows currently, we have more perp activity than spot when it comes to perp and spot deltas. Where'd the chat go? Let me just grab the chat, put this on the screen. So I'm just going back to the chat to answer wholesome gardening. No, I didn't trade all night. I traded till like 11:30. When I mean all night, that means like from 4 o'clock, 5 o'clock to 11:30 for me. I took a break. I drove to the beach. I live like 1 minute from the beach, a big beach, so I drove to the beach. But my wife had all of her friends over. This is going to sound silly, but my wife had all of her friends over. A friend of mine owns a company where they send nurses to your house and estheticians to your house, and they send IVs to your house. So if you have like a hangover, you can get this IV service where they, plug you with an IV, you sit on your couch, and I'm trying to think of the word that I want to use. Who cares? You get better. So all these girls were at my house yesterday getting fucking Botox. Like their forehead wrinkles done, and this girl was sent to the house. She has this whole kit. My wife didn't get it done. My sister didn't get it done, but I was stuck. I was in my office away from all them, thank God. Let's see. So this platform, that's Quant Tower. I had an issue with Quant Tower a long time ago. I ended up going back to them and only just I reduced the amount of size I have exposed to their API. No, Swift Academy, they don't look done for a couple of years. This is not the worst. This is not worse than the Great Depression. Just catching up. No, I mean, we're more, it's the profile right now is like a normal variation profile. It's not really, it's skewed towards the highs, but we have a poor bottom. But value is developing between 22.8 and around 21.8. Yeah, I think this is going to be a pretty volatile FOMC setup, honestly. So it would be more than 100 basis points for sure. I'd be careful trying to fade the first move too early. Yeah, so what I want to see for a bottom, and this may well not even develop this way, but what I want to see is spreads blow out. So large gaps between prices, right? Market makers blow out basically. And then you have a candle that basically has like a 10% range that closes all the way back at the high, right? Or a candle that shows a very significant response on the low time frames. We haven't really had that yet. And you could say candle or footprint, but to see that price responds that way in a very short amount of time, covers a great distance, resets, spreads blow out, and we just, that might not necessarily be the only thing, obviously, but we just don't have that yet anyway. So it's kind of odd to not have that. It almost feels like it's still setting up. Because Danielle, if you're expecting a visit back to lows, and why did you buy it? Because think it's a good value area. In the long term, it's been a good value area, so I want to make sure that I'm sticking to my own rules. And it's spot. So when it comes to my spot positions, there's no path dependency to them, right? They're not levered. They don't have any kind of liquidation point. And my spot, I am more importantly with my spot, and this is something you don't want to get, you don't want to let go too far, is I'm less price sensitive, because my spot positions and my futures trading positions are much different in how I get involved. Spot is smaller positions over time. So I already have, cold storage that is up multiples from where my initial, where the bulk of my purchases were made. But adding any future spot, it's not like I'm adding, millions of dollars in spot right now. I'm talking about just adding spot, just picking up, bites here and there. And I think that the 200 is a place that, if any places I should do it sort of mechanically, it's here. So that means, like, if I, bought at 22, I don't care if it goes to 21. Learning how to trade these conditions. So everyone in bull markets, people who benefit are people who honestly don't even know how to trade, because it's just up only. So I think the things you want to learn right now are just proper risk management. You always want to learn proper risk management, but how to be really defensive and not lose money. That will probably hurt you in a bull market, but at least, you might stack less gains than everyone else, but at least you won't give it back. What percent bracket of, I don't even know. It was pretty arbitrary, man. It was pretty arbitrary purchase. Probably not even something it was not a significant percent. So my whole point is I'm making sure that I add at that level. I'm a person who would much rather buy a large amount in a rising market than a large amount in a declining market at prices that I thought would be good prices. So I'm more comfortable buying into momentum, buying into a trend, than buying at a level that has been really valuable in the past. So the 200 is historically a great level, but historically we're talking about what, 2-3 instances at most. So I'm just buying this mechanically, but most of my positioning, especially in the past, it has been no different. I've chased markets upward to build the bulk of my positioning. So for example, in 2018, when we broke down initially after breaking 6K, right, I had a significant short position on. I closed that out too early, that's for sure. But I did not buy in the first days right after that. I ended up buying after we started grinding up. Yes, I use CVD. I use CVD. I use the tape. I use market profile. So I'm an order flow trader. So no, it's not a level. It's just an area, Shashank. So that, again, the trouble right now is that we need equities to bounce and find a floor. So if we don't, there's no floor yet for crypto. Unless we have some kind of very significant buying presence showing up, trying to front run the floor in the in equity indices. So we don't have that yet. So again, guys, this is not I'm not saying this is the bottom. I'm just buying here. And it's a insignificant spot position to add to what is long-term positioning. But keep in mind, there could come a time when, if things change, I could sell all of my spot Bitcoin. And I would just buy back in when things get better. Right now, it's not. We're not there. I sold the bulk of my positioning above 50,000, and I haven't really seen a reason to sell the rest yet. When I'm talking, I sold a bulk of my spot positioning that was on exchanges. Where did the chat go? So with Bitcoin, I mean, it's pretty simple right now, honestly. I wouldn't go too far down the rabbit hole with the 3 hours capital flood right now. I would just wait for, you're going to find out in a week whether or not it's true or not. Listen, if it did happen, it wouldn't be the first time that people that were too big to fail failed and blew up, but the term insolvency is not correct because they don't manage money. They're just strictly trading their own money. Unless they had some kind of massive levered play on, I can't see them really blowing up. I'd see them maybe taking a large loss, but what was I saying? Oh, in terms of the trend developing with BTC, it has to develop, right? So it's way too early. We know that we need a macro bottom now. Like there's no way we're getting a V-shaped reversal unless they say that they're going back to QE tomorrow and they're going to inject, XYZ amount of capital into the system. We know we would be fucked, honestly, long term if that happened right now. But I do think they increase their balance sheet again within the next year and a half. But we're not going to get a V-shaped reversal right now. So we are looking at, if a bottom develops, we're looking at a multi-month thing. So let's say that's here, right? When I say I'm happier to buy back into a trending market, it's when things do something like this. And then, let's say you get one final spring, and then we're treating this structure as support. That is a sign that you are, at that point, at least changing market structure. Right? Let's create some confluence. Let's say that you're back above, the most bullish level on the chart is 35,000, right? If we're back above that monthly level. But this is like, if you continue to say on the way up, like, oh, if we break this low, like we're going all the way back down. It's like, we're in a really strong bear trend right now. It doesn't make sense to talk about much higher levels because we've just continued to nuke down. It made sense to talk about them when we were right here, but now we're down here. So let's say we base out here. If we're back above and we're doing something like that and we're holding the level and it's not a day above, right? It's multi-day closes above, the level being sold, then that's a case for maybe the trend, it has changed. And who knows how far into the future that is. Maybe we've done that for a year, right? Maybe we're into July. And then, if we did this for a year, what do you have? If, let's say you consolidated for a year, the first acceptance through, after a year long of this, you never fade. So let's say it's to the upside, then I'm beginning to get very, very long. Because that would imply, just remember guys, the emotion that we're attributing to this right now is me drawing this on a chart. But if that happened, that would imply a ton of things changed. And that we are looking really good. Right? If you're back above this, and you've based out in here, then you're looking at least going back up to 42, right? You're probably honestly looking back up at the all-time high. But it's so easy to say that in a very flippant, casual way, right? If we do all that and then we're up here, then we're back. Well, then a lot of things have probably changed anyway, right? This is not doing on its own. Things have changed macro-wise. So keep in mind, unless it's long-term spot positions that you have no intention of touching and you're not sensitive to movement, this is going to take a while. But when it's really clear, when you've reclaimed market structure after a long period has passed, that's a good signal to act on in crypto because, believe it or not, people still don't act on it. So like when I was bullish, probably one of the most bullish periods for me was back here. Very publicly. This flip. Because we had created these highs for months. Even though this was a really violent breakdown, this was an absolute buy for me because it was a sign that things potentially had changed if we could hold the top of the structure. And there's still a lot of people that are like, oh, no, that wasn't that significant of a transition because they weren't really that zoomed out. They're still focusing on like the thin activity that took place right there and not really looking at the fact that this level was a huge level. Point of control here, top, top, top. This was a major change. So you had all the time in the world to get in down there too. So the same thing will happen again, in my opinion, unless it's some kind of major macro catalyst that creates a V-shaped reversal that takes us up, which right now isn't in the cards. So expect a lot of back and forth and just more ranging, honestly. It's a very good traders market. And Al Ghul, I know that sounds kind of funny, but I'm talking about the most sure trends that exist. And if we wanted to really extend it and make it even more comical, we could say that one of the most sure trends, right? One of the highest probability trends on this chart, trades even, is a break of the all-time high. And it's going to sound funny, but we could say if we're back above 68, you get as long as possible. But it's like, all right, like listen. Listen, buddy, take your medication, take a nap. You know that ain't happening anytime soon. My point with saying 35 is we're just talking about clear setups. You know you have a lot to deal with. And I just had said right after that now we're not talking about that because now we're down here. We're talking about that when we're up here, when this was like a major level that we might be contending with. So, what else, guys? It's an interesting question. Do you think there'll be a problem with liquidity in the near future or possibly even 1 to 2 years because it's printed or back to normal? I don't know. I don't know what normal is anymore. I feel like after COVID, nothing will be the same. So I honestly don't know how this ends. So I don't have an answer for you. I don't know how this ends without some kind of massive change to the global financial system. Like, because they can't continue to do QT beyond a certain point, right? They at some point almost have to increase their balance sheet again. So it's like we're going to get back to basically it's like you're going to get back to square one again. And you can't continue to do this. So what has to change? Is it like some kind of restructuring of the financial systems of the globe, new relationships, right, between countries, some kind of drastic change going to occur, CBDCs? I don't know. The point is I don't know. Al Ghul? No, I didn't think you were being disrespectful at all. Not at all, dude. So sorry if my response came across that way. I was just clarifying just in case, you know. What do we all look at? ETC? Come on, what's going on with ETC? Are you really... So, we're... hold on one sec. I wanted to look at AVAX, but Sol is basically doing the same thing. This is this is your daily level. This is not a daily level. Where did this level come from? I'm trying to figure out. Oh, that was a weekly level. Excuse me. I'm on the weekly chart. So let me move it over because otherwise I'm confusing myself. So the highest probability trades in this market have been daily and weekly closes, the first touches, right? Swing failures after spending a long time away from a significant swing point. Revisit to those levels have been high probability. Those are more risky. But first touches of major weekly and daily closes over time, they tend to yield the most positive results in the short term. So, I talk about it all the time, especially right now. You want to trade the highest probability setups, right? And these you could have them. You could have ones that I don't have. So don't think, I'm going to sit here and tell you all of them. You could have your own. The point is doing your own research. You could have your own high probability setups that time and time again you could lean on the most. So ones that have just been shared across the market are revisits to major levels, major contextual levels over time. And I'm talking about the first touches of these levels. So you almost always get a response. And this is where I don't understand people when they say they don't want to scalp or they're not willing to take very low time frame trades. Trading is just about, in this market, it's more than other markets, building a set of skills, right, that you can use to extract money out of this market. You're putting different shots in your bag, right? Or weapons in your arsenal, tricks up your sleeve, whatever you want to call it. So this is a market that favors generalism and having multiple approaches to this market. I trade the low time frames primarily. It doesn't mean I scalp 30-second chart always. It doesn't mean that it doesn't mean that I'm in and out of 100 positions a day. It means most of my stuff kind of falls within, a 24-hour period. But I also swing, right? I also take options trades as well. I have a pretty dynamic approach to this market, but I've also been doing this for a really long time. But the point is, when free money is on the floor, why wouldn't you pick it up? So revisits back to very significant structural levels in alts and BTC tend to be very reliable. In alts, they are more reliable. So let's repeat this. In alts, they're more reliable, and I've gone over this in the past, because BTC is now very correlated to macro. Alts are still more retail driven, at least more retail driven than BTC and ETH. So retail is going to reinforce these technical levels, right? So retail creates this sort of self-fulfilling nature to TA, or self-fulfilling. It makes TA basically self-fulfilling. So here we had you got from peak to trough, from trough to peak, a 9% bounce. In hindsight, you could do that, right? You could say, I could sit here and say, look, dude, why didn't you buy like I did and buy and get a 9% bounce out of this? I didn't buy this, by the way. I completely wasn't even looking at the chart. So you have to set alerts, right? I miss trades all the time, to honestly stopping paying attention. The point is, when you know that something like this exists, what you can do and model for this very basically is find out what the average return is from a bounce off of one of these very significant structural levels. So weekly, daily close. What's the average bounce? What is the mean bounce? What is the median bounce? Right? What can you, at a minimum, take out of the market comfortably? So it's the same kind of idea when I go into FOMC and CPI. Like, I know that I can 9 times out of 10 market into the first trade, the first move, right off of the bat with smaller size, and almost always close it out for 1 to 1.5%. Almost always. It sometimes goes 3%. It sometimes goes 5%. Maybe sometimes it'll go fucking 20%. I don't know. But the point is, I don't want to start approaching that with too much nuance and saying, well, let me try to time this one. And no, I want to take the shot that I'm very sure about and pull the money out that I could really guarantee all the time. So what that means is being very mechanical for me. These high probability trades are trades you could be very mechanical about. You could probably say with a fair degree of certainty that in thinner conditions, the bounces are going to be bigger, right? So I'm going to say that moving forward, I'm looking to take every return back to a high time frame level, and I'm looking to cut the position at 2%. Well, yeah, maybe they go much further, but at least it's a trade that you've just a trick you put up your sleeve. So Solana right now, some odd strength, honestly, by some alts. And it's probably due to BTC just being very correlated to macro. So between Solana and AVAX, and mind you, alts are just very oversold as well. Very oversold. They don't they are basically beta to BTC and ETH, but it's very easy for these to bounce and to also look like they are truly outperforming Bitcoin when it could just be a very thin bounce that it's making. It's creating that, it's giving that feedback. AVAX though, one thing I mentioned, and this is why I was getting short AVAX while it looked like we were making a low. And I talked about this last stream, why I was shorting AVAX. Either the stream, last stream, the stream before. AVAX is bottom. So fractals almost can help your risk management to some degree, right? In that if you're acting on them and they change, then you know that you have nothing else to lean on anymore. If you're leaning on a fractal and it changes, well, then there's that, right? At least you have a pretty well defined out, and you will see that a lot of times fractals do, especially in alts, fractals do repeat over time, right? Because people repeat their behaviors over time. Context might be different from one period to the next, just from a chronological standpoint, but people are people. So you might see that the fractals are larger or smaller depending on certain conditions. So you had this fractal. Maybe alts were bottoming. We were talking about, hey, maybe they're putting in some kind of short-term bottom. We're looking at bounces in the near future. We have a lot of, the market doesn't have to do this, but we have a lot of signs that it should soon. So, I mean, listen, what we are is trying to act on data, and this is the data. And if it doesn't work out, well, then that's variance, right? But at least we're trying to spin things in our favor. So we see a lot of reasoning to assume that we could be looking at some pretty violent bounces, at least in the next month or two. That doesn't have to happen, but I think that there's a good case to be made for that with alts, because it doesn't take much to move them at all. It's not like we're talking about, and this is the one thing that some people can't wrap their head around. I'm not talking about the market getting bullish and bouncing. Yeah, the people will be bullish while it's happening because narrative will follow price. I'm talking about the market bouncing for structural reasons, right? Due to microstructure. So you have people that are hedging at the bottom, sidelined, or short, okay? So there's built-in pressure from those. This capital is not being destroyed, remember. So capital is transitioning from one hand to the next. But it's not exactly being destroyed. There's people that have been sidelined for a long time that will chase momentum, and this is a very momentum-driven market. So we have that. We have pretty oversold conditions. And then the market's going to bounce violently, not because things are really bullish, but because things are really thin still. And because you get to a point where no one's going to want to passively sell this anymore, so you don't have much stepping in the way of a big move. And again, very reflexive, very momentum driven. If you've been around long enough, you understand that. So AVAX is kind of now doing what I had already boxed out. So this box was from the 2 streams ago. A stream ago or 2 streams ago. Either way, the box hasn't changed. So honestly, if we begin to base out right here, and we do more or less what we did in the past, let's say that we poke up and AVAX puts in some kind of second attempt at this low, then this would be a pair that I honestly would look to build a swing position in, right? And honestly, if you get reclaims in market structure over time, what that's showing you guys is that clearly the selling is for the most part in the short term done. So it could come back. It more than likely will come back. But if you do something like this, that's my point, you could just start looking up here. And it's not, again, remember, it doesn't mean AVAX is doing anything different. It doesn't mean that suddenly AVAX is really bullish. It doesn't mean that suddenly Bitcoin is going back to the all-time high. It means that this is an area that we're really nearsighted about. There are trades that exist within here, and we're looking to take them, right? We're looking to capture as many of them as possible. Something that happens like this kind of transition, sets up this kind of trade. I don't make the rules. It just happens, right? Who knows what will happen outside of that? But if it does happen, it's a trade that I'm absolutely taking, regardless of the economy. Because if that happens over time, and we're into August, and doing something like that, well, then all of that period of time that passed of price basing out, and let's say the news was consistently negative, the market has everything but the kitchen sink thrown at it at that point. So AVAX, Solana, I think that the one thing about AVAX, and this was kind of fuel to the fire of me shorting back here, the one thing about AVAX is there's a good amount of supply that's coming into the market. So anything that has a ugly FDV to market cap ratio still is not something you're going to want to long for any kind of sustained period of time. So for example, let's just go look at AVAX. And when I say not something you're going to want to long for a sustained period of time, let me parse that correctly. I don't mean you're not going to want to long it in the near future. I don't mean you're not going to want to long it. I just mean that you're not going to want to hold it for all-time highs. I think by now you guys should know that anyway. So the market cap of Avalanche, just to be clear, like everyone knows we're on the same page. It's going to take some time. There's going to be some great trading opportunities. There's going to be some generational bottoms that are coming up in the next 6 months to a year. But there's going to be a lot of doubt. There's going to be a lot of up and down behavior. But the sky hasn't fallen. The world's not ending. And crypto is only 12 years old. And all of you guys like crypto. All of the young people like crypto. All the old people are going to die. And as simple and terrible as that sounds, it sounds morbid. But the old people dying, they take their shit with them. So the FDV, their interests, right, their values, and unfortunately they take their values with them too. Because I think about this. A side note, like my grandparents, I have 3 of them. I have 2 of them left. Shit. They were like the world. My grandpa, my grandfathers were in World War II. They were like the greatest generation. Like it must have been so great to live back then, where you knocked. It was my childhood. You knocked on your friends' doors. When you left the house, you stepped into the nothingness. There were no phones. There were phones that but just none of this shit, right? No social media, no picking on people, no, I don't know, different evils, I'm sure. But anyway, fully diluted valuation. So basically, if you look at the max supply and the total supply, the available supply is like the float, right? Or the circulating supply is the float. So what this indicates is that there's going to be more supply that comes onto the market, right, than is available now. And if you're in a bear market, right, and even a lot of times in a bull market, this is overhead, right? This is supply. So it's very difficult for the market to absorb this during a period like we have right now. And you'll hear a lot like that, teams are going to pump it into this unlock because they're going to want more favorable prices. Let me just make something clear. The people that get seed rounds to pairs that have these ugly FDV to market cap ratios, all right, they are up 200, 300x, right? That's a bit of hyperbole. But the point is, they're so far up, they don't care if price drops another 50% because then they're still up 150x, right? So this is helpful insight into if you think like charts can't go lower, if they're structurally unsound, not just from a chart standpoint, but from how the emissions are, they can absolutely go lower because the people that are selling are still up thousands of percent, and they are not price sensitive. I'm sure they would love to get out at higher prices, but it's like a rounding error for them at that point. It's like, oh shit, am I cashing out my seed investment at 100 million or 85 million? Oh damn, this thing only cost me nothing. So Agar, sorry Daniel, I knew you Dan, I knew you asked it. Fuck. I knew you asked it a question, I knew you asked a question. I gotta do better about these streams. I need to like pause more, drink water more. I actually have a new Agar template. So you guys want to see my new Agar template? This is, hold on one sec. Can I switch the screen? There you go. Oh, my camera. You can see my camera is pointing to the back of my dusty computer. No, that's not the surface of Mars, guys. No, that's not the surface of the moon, actually. That's my dusty monitor. So this new Agar template, right? This is actually, I love to talk shit about some people who have their Agar templates where they could see every single exchange's price. They could see every single exchange's CVD versus their spot CVD. I think it's way too messy. I think it's really difficult to like synthesize all that information. So these are, I I took someone was kind enough to give me a template that I said that I enjoyed, but I got rid of a lot of stuff. This is basically just what I'm really focused on is the tape and the delta, but this gives you an idea of market health in general, right? I could see the spot selling delta, the perp selling delta. I don't want to know like specifically. I don't want to know specifically what Binance's CVD is always doing compared to FTX CVD is always doing compared to Bitstamp CVD. Like this came with like 10 different exchanges boxed up. Volume, delta of the perps, delta of the spot, basic perp CVD, basic spot CVD, and then you just have your 1 minute right here. So this is broken down by exchanges. So this is FTX spot, Bybit. And this I could easily synthesize. I could look at this very quickly, and I could see, for example, that spot was responsible for selling way more out of the lows, and then we had a good amount of short covering. You could see that right here. So a good amount of buying in perps, good amount of short covering, right? Heavy selling into the low. You can see some individual exchange activity broken down, but I don't want too much of it because it's just messy. I'm really focused on the tape. Speed of the tape, what we're seeing come through. If there's anything that's outside of, what is expected. And you can see the Binance footprint right here. This is basically, I think that this is, this is what I would normally have like CoinLIs set up to show. But this, I think Agar has a bit better of has a little bit of a better breakdown. And if you want this, go ahead and just message me on Telegram. So for anyone who wants this template, go ahead and send me a message on Telegram. My Telegram is @CanneringClark. And it might take me a day or two to get back to everybody, but I'll go ahead and send this template. So I'm never really focusing on this actively while I'm trading. This is, again, just the tape is something that's sitting above my head. This entire screen is to my top right. I see the tape. You can see the tape out of your corner of your eye, right? This is something that, I've been able to pick up on. I have the sound on for the tape when I'm trading. But this is something that I'll look at maybe a couple times, and it replaces using a few other platforms to get this information. Okay, so I'm going to be doing a bunch of new things over the summer and for the foreseeable future. One of them is going to be, and we're going to wrap this stream up soon. I'm going to probably do a call in a little bit later today. One of the things I want to do is do a workshop. So I'll talk more about that as the plans develop more. But I'm also going to be active on that new YouTube, still streaming. I want to put out some kind of updated course, and this one is going to be free. So the course would be free. And this is, why are you doing it for free? Because if I do a course, it doesn't, and this is not going to be some kind of, the course that I'll put out for free is not going to be crazy in depth. It's going to be pretty surface level when it comes to, again, going over some TPO basics, market structure basics, risk management basics, order flow basics. And honestly, it's going to sound like a dickhead thing, but the course is going to allow me to say, hey, dude, fuck off with your question. Just take the course. It's for free. Because I get a ton of questions that are about basic things that I, constantly talk about. I think I could spend a few hours putting together some video material, some video and slide material, set that up, give that out for free, and then I kind of end up saving myself a headache of answering millions of comments. And I don't want to be a jerk and say that, but I think honestly it'll work out better. And it'd be cool to give you guys something like that. And I haven't gone over anything with the workshop yet, so as soon as I do, it's a twinkle in my eye right now. It's an idea. It's that's like from the saying, like when you talk about someone before they were born, you just say like, oh, you were a twinkle in your father's eye or your mother's eye, before your parents did the the birds and the bees. It's just an idea right now. It's an idea that's not going to evaporate though, right? It's an idea that's going to come to fruition. I just don't want to say anything and then change it. Trading, I was just looking at a 30-second footprint, a 30-second chart, and a 1-minute chart. So, because and again, that's not something I always do, but yesterday, specifically yesterday, as we were moving down, there were just very clear rotations to take advantage of on that low of a time frame. And here's the thing. Did I just say here's the thing twice? God damn it. It's because as we're moving lower, you're getting larger moves. Things are thinning out, so I'm trading with less size. But on that 30-second chart, those rotation sizes, or that 1-minute chart even, those rotation sizes are multiple percent. So like if you look at a 30-second chart, like when we're back at 40,000 bucks, 35,000, it's like, what the fuck you could trade, people trade the 30-second chart, but it's not as clean and predictable always. You're not having the same range and price movement that you're having right now. So it was a matter of, okay, this is, where the action is right now. It's pretty predictable. I have a good feel for it. And that's really what it came down to. Yesterday it was like I'm looking at the footprint in the tape. It's in the corner of my eye, but it was basically just getting a feel for the rotations, and also knowing that after we would crest sort of what I would expect from a rotation, that there was really not much in the way in stopping price retracing that. So the short side of things was really easy to take advantage of. So. And we're still in the same spot, so we haven't even had a trade to take advantage of right now. Like, for example, these are horrible rotations. This is a 30-second chart, but there's no rotations here. If you go back, look what you're getting in the span of just a couple minutes. Let me go to yesterday. This is a 30-second chart, but the point is you're getting 3%, 2%, 5% moves. 3%, 1.5%, 3% basically. I'm rounding up. But just a nice rhythm to price. Oh shit, hold on a second. I'll change it up. So this is what I was talking about. This is a 30-second chart. On the way down, I was referring to, where are we? Am I losing a day now? Yeah. I was comparing it to right where we are now, which is nothing, right? I know, you guys, it'll catch up in a sec. I think maybe the audio beats the screen change, because some of you see that you hear me talking about the change, but you don't see the actual change on the screen yet. All right, guys. I think that'll be it. We ended up talking mostly during the stream. It's not like anything really set up. And I think that's an important point, though. You have to be willing to just sit on your hands. If nothing sets up, nothing sets up. Right? There's a tendency to want to get involved where price is so that you don't miss out, right? Oh, I could buy right now and versus waiting for price to come to you. Maybe it won't come to me. Well, it more than likely is. If you're looking to buy a dip, it's probably going to come back down. So you'll have another chance. Yeah, Phemex fees are competitive. So they're the same. They're better than Binance. So they're standard fees. Some exchanges have increased their fees, but Phemex is basically still the same. And they have like another 3 days left in 6 promotions they're running. I think they're giving away $30,000 to 30,000 in optimism tokens, something like that. Anyway, appreciate you guys. I was happy to answer some questions. I will post the next call-in, so I'm not sure what time that'll be today. And then I will be going live again on Thursday, and the call-in after that will be the same time. Yeah, that's what I really appreciate about Phemex. And when I started to get to know Jack, the CEO, and Max, they'd come from Morgan Stanley in New York City, so we had that in common, New Yorkers. But they wanted to be the Chase Bank of exchanges. Their primary focus, they said, was to just be reliable and to give good customer service, because they think that in the long run that'll make them better off, rather than try to like create products that FTX creates just out of thin air. But anyway, all right, guys, it's been a pleasure. Have a fantastic evening. Stay safe.